Yeah, if you want to buy a house in 2025 and you feel like the market's gone to shit and it's never going to happen, you're probably kind of right. A recent study came out from Desjardins. It said that the average Canadian first-time home buyer takes 6 years to save up money to get their first house. And that's based on the assumption that they're saving 20% of their after-tax net income to get into a home. The average first-time home buyer is getting left behind. And if you feel like that way right now, then you're going to want to watch this video because I break down the 4 sections specifically to how you can make sure you get into a home and succeed in Canada in 2025. So we're going to dig into why buying a home right now feels absolutely impossible. Next, we'll talk about why the 20% rule is a myth and when it makes sense and when it doesn't. Then we'll talk about how you can buy a home sooner than this article suggests and the property ladder. Plus, I'll add a bonus to give you a little bit of insights on how to make this all work together way smoother. My name's Alex McFadden. I've helped over 4,000 families currently run a mortgage business licensed in BC, Alberta, and Ontario, and we focus on teaching our clients how to make better decisions as it relates to mortgages every single day. All right, so let's first talk about why buying a home right now feels absolutely impossible. We all know what's going on in the world between the tariffs, the last 4 years of COVID, and the cost of living having gone up through the roof. Inflation is rampant everywhere, and the after effects of 2021 and 2020, they're real, and they're seen every single day, everywhere from the grocery store to buying a car, to buying a laptop, to buying a $3,000 iPhone. I mean, seriously, everything is exceptionally expensive right now, and the concept of saving 20% of your net income is absolutely crazy to think about. Plus, our government taxes us like crazy. On top of all that, the real estate market has seemed like a roller coaster. Since 2022, we've seen interest rates rise 4% and then come back down 2%. We've seen house prices be completely unstable, going through the roof in 2022 to all the way dropping down to this roller coaster and up and down of 2025. It's a confusing place to be if you're buying a home in this market right now. If you live in a place like BC or Ontario, the average timeline it takes to save up 20% for a home is 7 years and 8 years consecutively, and that's definitely not in the city. Wages have not kept up to the value of homes in many of these markets, but believe it or not, there's actually light at the end of the tunnel. So now you have all the reasons why nobody's buying real estate in our country, or first-time buyers are thinking they can't do it. This is one of the biggest myths that you need to know about. It's the 20% myth, and I hear it crazy enough every single day, still to this day, since I started in the industry all the way up to today, 15 years later. The number one myth that I hear on a daily basis is, do I need 20% down to buy a home? Short and sweet, the answer to that question is no. So when we see surveys like this come out that talk about 6 years, 7 years, or 8 years to save 20% down to buy a property, I have to ask the question, why are people waiting to save 20% as opposed to the minimum down payment, which is 5%? And if you don't already know the rules around that, you could put down 5% on the first 500 grand and 10% for anything above that. Plus, as of December of 2024, the government changed the guidelines. Now you could put down less than 20% on a home up to $1.5 million. And because of the way insurance works in Canada, they make it so safe for lenders that they would be crazy to not say no. As long as you have the income to be able to qualify, then you should be able to put less down. Now, therein lies the next issue. Depending on which city that you live in, your income might not be enough to debt service 5% down on a home. Thankfully, the new rules in December also included the ability to do a 30-year amortization on an insured mortgage of less than 20% down or a new build property, which means that it allows people to qualify for more money and spread that money out over a longer time horizon, which just basically helps you get into the marketplace. Now, there are some people out there who argue that 5% down is a mistake and you should never do it, but most of those people are those who had 20% down in the beginning and didn't have the opportunity to get into the market with 5% down, or didn't get good advice around this, and so they're jealous about the fact that someone else made this decision. Myself, I bought my first property in 2009 with 5% down payment, and there's no chance I ever would have owned a property had I not done exactly that. And so the truth is, in my personal experience, I don't see many first-time buyers waiting 6+ years to save 20% down on a home. It is such a rare thing, and crazy enough, I've actually seen it backfire on people where they were saving 1, 2, 3, 4, 5 years and property values increased, and it just felt they were consistently over and over again having to run after the 20% down, because if the price point went from $400 to $500, now you need another $20,000, $500 to $600, another $20,000, and so forth and so on. So the idea of chasing 20% down on a property is really just unreasonable, which leads me to my next point. So this is how you can actually buy a home sooner. And this is relevant in 2025 because for the first time in a long time, studies are actually showing that it is less expensive to buy than to rent if you can get into the marketplace in many Canadian cities. And of course, we have the benefits of seeing that people who own homes have substantially more wealth than those people who rent. And last but not least, there's a level of stability in life of owning a piece of real estate versus having to rent if you feel like that is for you. Of course, not everyone should own a home. And we've already talked briefly about the 5% down rule, but we haven't discussed specifically how that works. When it comes to 5% down payment, I think a lot of people forget that you have access to funds from a variety of different sources. It could be a gift from a family member. If you have a company, you can use your RRSPs or a matching program with your company. Or even if you don't own a company, you can put money into RRSPs. And I've actually seen, crazy enough, people borrow money, put it into their RRSP, and then withdraw that 90 days later to use that for a down payment on a home. You can get a little bit creative, and this is something that I'm seeing more and more and more of these days, and look at co-signing. Now, co-signing doesn't have to be the traditional way with family members or parents, although that is an option that I'm seeing a lot more people choose to do, but we're also seeing more co-applicants that are friends and roommates purchasing real estate together. Now, the key to that is to set up a good contract. I've done videos on that in the past. If you'd like to know more information about setting up a good contract, then send me a message or put a link in the comments below so I can send you the breakdown. But in the meantime, the idea of co-owning real estate is becoming a real thing in many different areas across the country, whether it be for investment or something that you live in for yourself. Now, maybe you can qualify for the property and you can put 5% down, but renting right now is less expensive, but you see the value in home ownership, especially as house prices are deflated with high listings right now. While a lot more of my clients are actually choosing the option of buying a 2-bedroom property and renting the second bedroom out to roommates to make up the extra money. And the crazy thing is, a lot of these people are building wealth and accumulating equity in their real estate, paying down their mortgage by using their friends' money, which also is beneficial to them, and putting them in a more stable position. The other thing that I'm seeing a ton of right now is early gifts and inheritances. More often than ever, people are living with the idea of a living inheritance, which basically means your parents or grandparents giving you the money before they pass away. Because why not? They're in a position where they're going to leave you money after they die. They might as well give it to you while they're living. And genuinely speaking, most parents or grandparents are open to the idea. You just have to ask the question. Or if you are a parent or grandparent, I would ask you, would you rather see your kids or your grandkids benefit from being able to have access to this money and live in a home today, or continue renting and throwing their money away? And lastly, but this is a big one, more and more of our clients are adding a side hustle or a secondary income source, and more lenders are being open-minded to using this secondary income source to be able to help them qualify for a mortgage. With technology, with AI, with everything that is going on, we're seeing everything from our clients choosing to be creators, to create technologies, to do all sorts of different things based on their skill sets to make extra money, and it's helping them get into the marketplace sooner. This is one that I wish more people would think about in the beginning. And I don't know if it's a generational thing, but it's genuinely stopping so many people from getting into the marketplace. And it is the ladder, the house ladder. This is the opportunity for you to get in on the bare minimum, whatever that looks like for you, a studio, a 1-bed condo, a 2-bed condo, maybe a small townhome, depending on the type of real estate that's available in your area, build some equity, and then move up on the ladder. I referenced myself earlier in this video, and I did this exact thing when I bought my first property in 2009, where I bought a condo and I bought it in an area that wasn't that great, but it had a lot of potential. I put a lot of time and energy and some money and sweat equity into redoing and renovating that property to make it look nicer and better so that eventually I could make the move up. Now, my story is one where I never ended up selling that property. I refinanced it and moved into a second one. But this is your opportunity to get in on the bottom floor and move your way up. Far too many people think about their first home as their forever home. And the truth is, most Canadians do not live in the same home for their entire lives. So getting in on the bottom floor may give you the opportunity to move up to the next level, whether it's a renovation, buying an area that has the ability to expand or grow or see equity growth, or maybe just like the beginning stages of you owning real estate. This is your opportunity to get in and build equity to move up. Listen, the game has changed. 20 years ago, it was easier to get into the real estate market. Before the 2008, 2009 financial collapse, before 2014, 2015, when real estate took off in many areas throughout the country, before 2020 and 2021, when market blew up. But this is the best time I have seen in the last 10 years to purchase real estate. Listings are at record highs. Interest rates are, believe it or not, below the 25-year average. No, they're not at 2%, but they are still very low, and the opportunities to negotiate and get into the market is better than it's ever been. But I won't lie to you, it's not easy. The income required to get into the market is higher than it has been in a long time. And genuinely speaking, you still have to find a way to save that money. Now, if you want a personalized plan to help to build out your financial situation, please reach out to me in the comments below. And if you found this video helpful, hit that like, hit that subscribe, and share this with someone else that you think would benefit from this video.